Hello and welcome. I'm Miloni Bhatt. Welcome to ET Future of Money Summit. Now, there have been tremendous changes in the way we transact using, uh, payment system. A couple of years ago, it was unimaginable that you could pay your local roadside vendor for your vegetables through a phone, but it's now normal. And there have been tremendous transformations in the payment system. Other tech innovations like cryptocurrencies, stable coins, etc. And right at the center of this rapid, mind-boggling churn are central banks, juggling potential risks and benefits of all of these technologies. Now, to take advantage of blockchain technology without losing control of the money supply in their economies, to ramp up financial inclusion, for instance, many countries are looking to launch a central bank digital currency or CBDC, as is India. India's finance minister has said that the digital rupee will launch sometime this financial year. A wave of CBDCs is coming. What are the lessons for India? Now, to give us some insight, I have with me economist Eswar Prasad, Tolani, Senior Professor of International Trade Policy at Cornell University. He's authored several books, and the latest being The Future of Money, How the Digital Revolution is Transforming Currencies and Finance. Professor Prasad, welcome, and thank you for your time today.
Thank you for having me on, Miloni.
All right, sir. To get started, around 100 countries are exploring CBDCs at some level or other. What are the benefits of a digital currency over a physical currency, and why are countries around the world looking to make this transition?
So as you correctly pointed out, Miloni, in many countries around the world, the digital transformation is already pushing people away from the use of physical currency towards digital forms of payment, largely provided by the private sector. So this creates a bit of a quandary for central banks that want to keep their money relevant at the retail level. If they don't switch currency to digital forms, perhaps the currency that they issue will not be used for retail transactions anymore. But there is a broader set of issues beyond just the viability of central bank currency at the retail level that is coming into play. As you alluded to in your introductory remarks, some countries seem to view introduction of a CBDC as a pathway to financial inclusion, giving everybody in the economy, small businesses, consumers, easy access to a low-cost digital payment system. The Bahamas, which has issued the world's first nationwide CBDC, the sand dollar, has this motivation, for instance. In other countries like Sweden, where the private sector is doing a perfectly good job of providing digital payments to everybody, the Riksbank, which is a Swedish central bank, seems to view a CBDC as a backstop to a private payments infrastructure. In other words, the private payments infrastructure might be functioning perfectly well in normal times, but it's subject to confidence vulnerabilities, technological vulnerabilities. So CBDC becomes a public payment option that is a backstop. Then there is China. In China, there are two payment giants that have dominated the payment space, but the central bank is concerned that while everybody in China might have easy access to low-cost digital payments, the reality is that these two payment giants are blocking competition. They were not until recently willing to share data with the government. So these are the motivations at play. Now, certainly having a CBDC rather than physical currency will pull a lot of economic activity out of the shadows because it's harder to conceal transactions that you don't use physical currency for. It makes it less likely that central bank money can be used for illicit transactions. So there are a variety of benefits, in addition, of course, to giving everybody in the economy, as I mentioned, including very small businesses, including hawkers on the street, and even consumers who may not have very high income levels, access to digital payments, and that gets away from the problems of handling cash, the vulnerability of cash, the loss, theft, etc. So there are many benefits to a CBDC.
Okay. Professor Prasad, you alluded to the digital payments, right? So that space in India is growing. Recently, there was a report that came out from a digital payments company and the Boston Consulting Group. And I think the title of the report was Digital Payments in India, a $10 trillion opportunity. Now, basically what it said was that India's digital payments market is expected to increase threefold from current some $3 trillion to some $10 trillion by 2026. And I think they also said that it would translate to digital digital payments, non-cash. That would make 2 out of 3 payment transactions by 2026. So now there is already this tremendous shift towards digital payments. In this backdrop, does India need CBDCs?
That is a very legitimate question. And I think for countries issuing CBDC, this is a fundamental question to be posed, because while I talked about the many benefits of a CBDC, there are also potentially problems. You might end up potentially challenging private sector innovation in terms of payments, because after all, who can compete with a government-funded payment system, even if that is run by the central bank? You might disintermediate the banks. That is, deposits might flow out of banks into central bank digital currency wallets. Plus, of course, if you don't have the option of using physical currency, any vestiges of privacy that we have left in our financial transactions might be lost. So this is an issue that every country needs to approach carefully. And for a country like China, or for that matter, India, there is a legitimate question about why we need a CBDC if the digital payments architecture is working perfectly well. And I think the answer here is that there might be some modest benefits for a CBDC in such countries, because you can think about a CBDC as basically expanding the menu of payment options that are available to consumers and businesses. And in some countries, the CBDC might essentially be viewed as a payment infrastructure provided by the central bank or by the government, and the CBDC essentially being a digital token that is interoperable, that can operate across different platforms. Now, of course, in India, thanks to the UPI, we already have the requirement of interoperability across different payment platforms operating on that sphere. But in many other countries, that is not the case. So certainly in India, we have made so much progress in terms of digital payments that the CBDC itself is not going to be a fundamental game changer, but at the margin, it might have some benefits in terms of the central bank still having an important role in the payment system.
You alluded to the fact that it might impact the innovation in the payments space. Do you see CBDCs from your vantage stifling innovations in the payment space in India?
That is a real risk in any economy. Once the central bank, which is backstopped by government, steps in, it could be very difficult for private players to compete. But again, the design issues become very important here. There are conceptual and technical design features of a CBDC that can substantially mitigate, even if not completely eliminate, some of the risks that I've spoken about. So let's take the example of this architecture that I laid out, where essentially, like the UPI, you end up with an architecture on top of which private payment providers can manage the front-end services. They can manage not only payment innovation using the UPI platform, but in addition, using the digital tokens provided by the Reserve Bank of India. That might actually work somewhat better. So you might have front-end payment services in addition to some of the regulatory requirements, such as know your customer functions, being handled by private payment providers, who could be commercial banks, basic payment providers like Paytm, or perhaps even telecommunication companies. So we might actually end up seeing even more competition if this is well managed. And I think actually India is proving to be an exemplar for the rest of the world in terms of what the role of the government should be. Not in terms of providing front-end payment services, but staying at the back end, ensuring the integrity of the payment system, providing the CBDC as a digital token that can be used by other payment providers, but leaving all the front-end services and the innovation in that space to private payment providers.
So are you saying that, the digital rupee will be able to still disrupt the digital payment space?
In India, I don't think disruption is likely. I think a marginal enhancement is more the vision that the RBI has. And it's worth thinking about how the RBI is approaching this. As the governor of the RBI has made it very clear, what India plans to move forward with is first a wholesale CBDC. This is not the money that consumers or businesses see, but that is used to settle payments across different banks or other financial institutions, or even non-bank financial institutions. So the blockchain technology, it turns out, can be potentially useful there in terms of making those payment mechanisms a little more efficient, which we consumers might not see huge effects on in terms of the front end, although it might make things more efficient, somewhat less expensive, and so on. And then the RBI is going to move forward with the CBDC. But again, in India's case, given how much progress has already been made by the private payment sector, in addition to the UPI, I don't think it's going to be a game changer. Like I said, it's just going to be a marginal enhancement.
Okay. Also, this was something that you pointed out in one of your earlier responses, privacy, which is one of the big concerns. As you said, transacting with cash will provide you with some sort of anonymity. The other thing is, if I'm going to go out to, say, dinner with my family, does the government need to know about it? So how do you see this issue of privacy being tackled? And, what are the broader dangers then with CBDCs?
That's a hugely important question, Miloni, as we move towards a world where payments are going to be entirely digital, because the reality is that anything digital is going to leave a trace. And whether we want to live in a world where, as you said, you take your family out to dinner or buy a friend a cup of coffee, either a private payment provider or the central bank, and therefore the government is going to know about it. That's a somewhat dystopian world. And I do worry a great deal about this. Now, certainly there are benefits in terms of making sure that central bank money cannot be used for illicit activities, but there are perfectly legitimate activities that we might not want the government to have an insight into. There are potentially ways of meeting the central bank or government's concerns to make sure that all transactions are auditable and verifiable, with providing at least some degree of transactional privacy. Let me give you an example from China. In China, the central bank digital currency trials are moving forward with 5 grades of digital wallets in which the CBDC can be maintained. The very high grade digital wallets can maintain large balances, can be used for large value transactions. Those have to meet know your customer and other regulatory requirements. But there are low grade wallets where you cannot maintain large balances, that you can use only for low value transactions, where apparently all you need to do is provide your mobile phone number and no further identification. There are technological solutions appearing again, cryptographic tools called zero knowledge proofs, for instance, that will allow people to verify their bona fides in a suitable way to the government or other regulatory agency, and then undertake transactions in a digital form without necessarily revealing their identities. But the reality, Miloni, is that once things are digital, it's going to be possible to unravel these transactions. In addition, digital money creates a whole lot of other possibilities. You can see a government deciding that it doesn't want the money issued by its central bank to be used for activities that it deems illegal, say purchasing ammunition or certain types of drugs or so on. So you can very easily see us moving towards a world where money issued by central bank is used not just as an instrument of economic policy, but perhaps even social policy. Now, this might seem like a relatively dystopian world, but I worry.
Yeah. You spoke of China. So please help me understand this, Professor. In China, then, can you have multiple wallets? One for very high value, with CBDCs, and one for low value, and is anonymity different for each of the wallets, if I understand correctly?
That is correct. Just to be clear, China is in the second phase of its domestic CBDC trial, so it's not widely available yet.
Yeah.
And in fact, the Chinese government is having a very difficult time convincing people to use it, because Alipay and WeChat Pay, the 2 dominant payment providers, have blanketed the economy with low-cost payment systems, whether in rural areas, urban areas, high-income, high-net-worth individuals versus very low-income, very low-net-worth individuals. So the People's Bank of China is having a difficult time convincing the population to use the CBDC. And in fact, they have somewhat ironically argued that that is the government or central bank, would provide more privacy to citizens and businesses who might be using their digital currency compared to the private payment providers who might use that data for commercial purposes. So as you noted, the way the CBDC experiments are being rolled out is with different grades of digital wallets, which in principle provide different degrees of anonymity and different degrees of functionality.
Do you see this kind of replicating itself in India, where the government, the CBDC, may not have many takers and will compete uh, with the private players?
It's going to be very interesting to watch whether there is going to be a huge deal of enthusiasm for a digital version of the rupee or not. Now, unlike China, India is not as far along in terms of its transition towards a purely digital payment-led economy. So there might be some role yet if the RBI moves relatively quickly. But even if the RBI does move forward, there is going to be a question about whether people will just prefer the convenience of private payment systems, which might give them access to other types of products and services rather than using a digital rupee. My sense is that the digital rupee will still have some takers. It will find some value, as I mentioned earlier, in terms of enhancing the overall payment space, but it's by no means going to be dominant in my view.
Okay. The Indian government speaks time and again of its vision and also actions to building a cashless digital economy. Do you see a CBDC then competing with the fiat?
So the CBDC would be a version of the fiat currency. So if you think about a fiat currency, it is one issued by the central bank, which is largely, essentially in physical form right now. So certainly a CBDC would have the same characteristics of other forms of central bank money. That is, it would remain a liability of the central bank. It would be provided by the central bank to commercial banks and other sorts of financial institutions that would then go out and distribute it to their customers, who could be businesses or consumers. So all of that would remain the same, except that it would be in digital form rather than in physical form. So the interesting question is whether the use of central bank money will be entirely displaced by the private monies or not. And at one level, especially to a monetary economist, this is quite fascinating because, when money was first created many centuries ago, there used to be competition between government-issued money and private money. The establishment of central banks around the world over the last couple of 100 years basically decisively settled that competition in favor of central banks. And now we're coming to a new era of competition between central bank money and private monies, at least in terms of the medium of exchange function, that is for conducting financial transactions. And as an economist, of course, I believe that competition is a good thing so long as it is kept within guardrails. And I think overall, the government of India and the RBI are doing a good job of creating the guardrails for that competition.
What is the kind of impact you see CBDCs in India having on cryptocurrencies?
Now, of course, this is a period when decentralized cryptocurrencies such as Bitcoin are taking a real beating. And that day, in my view, was going to come because there is no fundamental value that Bitcoin has, because it's proven to be so volatile in value that it's not working very well in the purpose it was intended for, as a medium of exchange. Now, the interesting thing is that there are new cryptocurrencies called stable coins that get their stable value precisely by being backed up by stores of fiat currencies. So for instance, there is the USD coin, which is backed up by reserves of US dollar denominated assets. Even those stable coins have proven to be slightly shaky in value, but at least the objective of stable coins is a lot better. That is, they're not decentralized like the Bitcoin. They're supposed to maintain a stable peg relative to fiat currencies such as the dollar, or perhaps one day the rupee. And then they ostensibly provide more efficient domestic payments as well as international payments. So if you have a CBDC or other digital payments, then there is a question, why do you need any cryptocurrencies at all? If you want better mediums of exchange, why do you even need stable coins? And that is, I think, an interesting question to which we will find the answer in different countries pretty soon. While there is a strong need for digital payments, once you have a central bank providing a low-cost, easily accessible digital payment system, the base case for stable coins is really going to be undercut. One might argue that maybe stablecoins will still be relevant in terms of international payments because cross-border payments are still beset by all sorts of frictions in terms of cost, a very long time to settlement, and so on. And stablecoins are creating some efficiencies there. But here too, there are many central banks working on cross-border initiatives to make wholesale CBDC, make international payments work much more smoothly. So I think this crypto winter that we are seeing right now is going to be not just a passing phenomenon, but it's a structural feature in some part due to the response of central banks to the cryptocurrency revolution.
Professor Prasad, do you see CBDCs? So do CBDCs take away from the decentralized nature of blockchain? Are CBDCs handing the power back to and placing all trust in central banks, something which the white paper of Bitcoin spoke against?
That is true, Miloni. That's an intriguing question, because the whole point of decentralized currencies such as Bitcoin is to get away from trusted third-party intermediaries such as a central bank or even commercial banks or credit card providers to finalize transactions, and to have decentralized trust that is not trust in any particular institution, but in the community trust, so to speak. And what we are seeing is that these decentralized cryptocurrencies are not working well, even in terms of their basic purposes. So I refer to stable coins. Stable coins work well as mediums of exchange precisely because they give up all elements of decentralization. They're issued by a particular agency that is also responsible for validating the transactions, and they are backed up by stores of fiat currency. So there is very little decentralization left here. And the point you make actually is a bigger one, because if we move to a world where we have CBDCs, where potentially we have stable coins issued by major corporations such as, say, Amazon or Facebook, which is now called Meta, and so on, we might move to a world where these sorts of stable coins and central bank digital currencies start dominating the payment space. So we might actually move to a world where there is even greater government as well as large corporation control over our financial, economic, and social lives. And that is a very worrying prospect. So ironically, the decentralization revolution that Bitcoin started off with might lead us to a world where there is even greater concentration in finance and greater concentration of economic power that lies in the hands of governments and big corporations.
This really, I want to speak now then about inequities, right? India has tremendous inequities in digital access. Financial literacy also is very low in our country. Do you see CBDCs empower the bottom 100 million or 200 million in India?
I hope so, Miloni. That is the real hope. As you say, the point of these new financial technologies is to try and democratize finance. That is, give everybody in the economy, even very low-income individuals, easy access to digital payments so that they don't have to deal with the loss or theft of cash. Give them a portal through which they can get access to basic banking products for managing savings, credit, risk, and so on. But there is a potential worry here that if people get carried away by cryptocurrencies, in particular by decentralized cryptocurrencies like Bitcoin, and see that as the path to economic salvation. As you pointed out, there are people with very low levels of financial literacy. In addition, digital access is not evenly distributed. So you might end up with these new technologies, rather than democratizing finance and improving the economic futures of those at the bottom end of the economic pyramid, essentially further heightening inequality and creating even more risks for those who are least able to tolerate them. So I think while the cryptocurrency revolution has set off some changes that I think are ultimately going to be beneficial, it's going to be very important for governments and regulators to make sure that there are guardrails in place to ensure financial stability, market integrity, as well as investor protection, which includes increasing disclosure requirements for many of these products, making sure they are not misadvertised, and especially making sure that everybody who's getting into these products understands the risks very clearly before getting into them.
Professor Prasad, really there is a lot for governments, for central banks to think about. I want to now move to a quick rapid fire round, where we'll ask you a few questions related to the future of money, the future of finance, and you can choose to answer it in a line or a couple of words. So to begin, if you had to describe the future of money in one word, what would it be?
The end of cash, the rise of digital payments managed by companies as well as the central bank.
One radical technology that you expect will redefine the world of finance.
Blockchain technology.
Name one fintech innovation that excites you the most, given its potential to drive impact at scale.
So features such as smart contracts built on decentralized blockchains, I think, can have a truly disruptive effect.
Okay. And which form of currency do you expect will be most used in the next decade? Cash, digital, crypto, or CBDC?
A combination of digital and CBDC.
All right. So thank you so much for your time and for your responses today. I'm sure, there is a lot to think about in each one of them. And as you said, for the Indian government, for the central bank, it's very important how they manage this entire disruption in the payment space, how they go about managing CBDCs, and what is the kind of avatar it will take for India. That will be very interesting to watch. Professor Eswar Prasad, thank you so very much for your time and for your expertise today.
Thank you very much, Miloni. I will realize that promise, but I hope we will get there. Thank you.